The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 13th, the Friday the 13th edition of today's Trader's Edge show. How appropriate for a week like we have had out there. Hey, I want you to know that I'm absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. And inside the subject heading, if you'd be kind enough to put radio show question, of course, in the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic Friday the 13th, March 13th out there. I'm Steve Rhodes. Welcome to the show. Right now we got the Dow trading up 537 points out there. That's about 2.5%. The same really across the stretch of indices out here. Trading the highest are the transports. They're having the biggest bounce right now, 3% move to the upside. Spot volatility index trading out at 72.32, only back 4% right now. Not really a great sign. Gold is trading down $72. Something to think about. It's off the low, but about maybe $15 or so. I think at this stage here, silver's down to $1.40. That's 9% to the downside. And really what I posed as a question inside the Tiger's Den is, what is going on with gold today? What's the logic behind it? I know on Fridays there could be big moves out there. And in any event, light sweet crude is trading up 32 cents. We'll go take a look at what gold is doing, look at the technical piece of the market out there. Natural gas is up about 3 pennies. Treasury bonds back 2 points plus. Leading the charge to the upside, dollar-wise, booking holdings, $38, 3%. Amazon, 37, 2.25%. Google up $26, 2.5%. Transdigm Group up 19. To the downside, it's Tesla, trading out at $5.20. That's off 7% or $40. Intuitive Surgical down 3%, $14. Domino's Pizza off $14. So there's certainly stocks to look at. But let's go take a look at what you want to look at. Only a couple of requests, or really only one request at this stage here. So let's do the general market overview, if you will. Let's take a look at the Dow. I just happen to have this up on my chart and was just taking a look at now this is a quarterly time frame chart here for the Dow. It just kind of puts it in perspective, right? So, well, I don't know if it's right or wrong. But what I've noted here are the lows of 2018, the lows of 2017, and the lows of 2016. And what we know is that the lows have been tested, so far rejected, daily basis, monthly basis, the low of 2018 out there. But it closed below, this is, we're trading at 21,770, that's 21,777, basically right around there. And the low of 2018 is 21,712.53. Now, if we close below that, so these would be, let's call them floors out here. We're going to look at several different floors. We're going to take a look at both sides of the market out here. But boy, you close below the 2018 low, there would be very few reasons to suggest that the Dow won't go and make a run for the 2017 low. Now, it's not that substantially further below where price is trading right now, but it's 19,677, and that would put a lot of pressure. So I would say that today, watch the price point of 21,712.53 for the Dow. Now, I didn't do this for the S&P and the other indices out here, but probably worth doing on your end to get some type of gauge as to what the market is communicating to us at this stage of the game out here. So an important level is being tested as we speak, and it would be a positive, in my opinion, if price closed above that today. And it would, because then we'd have 2 days below. So here's the daily time frame chart. So let me just go ahead and pull this back. Stevie's kind of 2-day rule out here. With the first day, you bust through a key level of support. You just like to see follow through. Is there a follow through? Was it an overshoot? Right now, at 1:11 in the afternoon, it looks like maybe an overshoot. But I'd watch the 21, 712, 53 for some type of signal out there. Now, I have not gone back and done the thorough study like I do with the other tools to know whether that's worth a hill of beans or not. I think it is. Otherwise, I wouldn't have shared it with you. And that way, it makes it really pretty easy for the non-technical person that might be actually listening in to the show out here. If we take a look at, let's go from, that was quarterly, daily, monthly that we were looking at there. If we go from there to what the markets are doing intraday and levels and key areas to be watching. So I'm going to pull over. And we'll start by taking a look at, this is the futures contract. And so we'll start with the NQ. We can go take a look at the ES as well. It's basically doing the same thing out here. And so we had futures trade up to limit up this morning around 720-ish or so out here. And then the market's open. And what was nice about that, so, you know, you and I, we were just looking at floors or potential floors. And we're just looking at calendar year lows out there, just the most simplest of tools that one could possibly use. By the way, holding that low, and if we get some nice signals out here, you can see one heck of a move higher out there. I don't know if the low is going to hold, nor do you. That's why we really want to watch it come the end of the trading session out here. But back to now the 30-minute time frame chart for the June contract for the NASDAQ. So just like in floors, if you get through one floor, you go down to the next. Well, here we're looking at ceilings. And the ceilings are the green horizontal lines. Those are the TD9 count resistance levels out here. And so price closed above that. We haven't seen it close above resistance level for a while. So that was most certainly a short-term positive. Market opens up. The cash market opens up and does what? It makes a beeline for the next resistance level, 77.15. So 77.15 on the NASDAQ will be a real key level to be observing and to be watching come the end of the trading session. Why? Because if the NASDAQ can close above that level, well, its next area of resistance would be 81.67. Now, that is a 30-minute time frame. We'll get some slightly different views as we move up the ladder of different time frames out here. So here's the hourly time frame. So it can make sense to you and I, or should make sense to you and I, in that 30-minute time frame chart, that price struggled at resistance. It doesn't mean anything more than that at this stage of the game. Price struggled at resistance. Now, when you go up one level, the 60 or the hourly time frame chart, this forms a TD9 count bottom. Beautiful thing. Price creates a TD9 count top, and it does it right at the TD9 count resistance level, 77.03. I don't make this stuff up. And then what happens? Sellers are able to push price down to support on the hourly time frame. The hourly time frame would have two levels of support that you and I are looking at. There's a third level. I don't want to mention it at this stage of the game, but you can see it on my chart. And there's a red line, and it's towards the bottom of the screen out here. But what prices, only sellers have so far been able to do today, and this is different than what we've seen over the last several days out here, is they have pushed price down to support on the hourly time frame, and it's held. Support being the oscillator and change line, Stevie's red line, as well as the bottom of those profiles out here. So now, in this case, its key level to watch, 77.03, but really right above that, 77.99. That's the 2-hour time frame. That's the 1-hour time frame chart. Here's the 2-hour just before we go to the breakout here. Nothing broken here. A new profile that would suggest price should be able to make a run for 77.99. Steve Rhodes with TFNN. Be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at this chart here. This is the 2-hour time frame chart for the NQ before it went to break. It makes sense that price found resistance where it did earlier this morning. That was at the top of its existing profile. That at that time, there's a new profile in place out here. And I'd mentioned 77.99. The area that the NQ would have to clear before that comes into play is the next resistance area, which is the top of the new profile, and that's at 76.43. Now, I'm not sitting here telling you that price is going to be able to take these levels out. I'm just being able to so you can scribble them down on a pad of paper. You watch how the rest of the day plays out. Price is still above support. In this case here, support being, this is the 2-hour time frame chart. 2-hour time frame chart. This is the Stevie's red line. At 72.93. So, and that kind of feeds into the question right here from Jim. So Jim wrote in earlier today, said, hey, Steve, is it time to start selling the rallies instead of buying the dips? And so, we certainly are in a sell the rally mode out here. But I think right now what you have to do, Jim, to answer that question is, look, I'll just go to a 5-minute time frame chart. Can I do that? Yeah. So here's a 5-minute time frame chart. So when it topped as the cash market opened this morning, no surprise to any of you, it did it with a Rhodes momentum indicator signal, 5-minute time frame, bearish reversal candle. You know how I pay attention to those, as you should as well, or bullish. And what is a shooting star? What does price do? It moves down. It finally bottoms with a Rhodes momentum indicator bottom. And so just on the 5-minute time frame chart out here, you've got a series of higher highs. And then you could make a case that you've got a series of higher lows. So I don't know, Jim. I think we've got to just sit back and let this play out. Do I think over the longer haul or the bigger haul? So if you're asking me where to sell the rally, if that's your question, then I would go to a daily time frame. And I would say that the ideal place to sell the rally, and it's a big one, is 81.77 or thereabouts. Now we're taking a look at the NQ. We're looking at the June contract. We've rolled over into that. We're trading at 7,500 right now in the NQ. So now at 677 points in the NASDAQ, you could do that in a heartbeat, right? I don't think we're going to do that in a heartbeat. But if you were asking me, Jim, where's the better spot to try to sell into it, it would be up at Stevie's red line out here on the daily time frame out there. Your question also goes on to say, I'm also looking to buy DLN. So let's go type in DLN out here and see what that is. Well, actually, that's not going to show me on this chart. I don't have the name. But let's actually find out what the name of this instrument is, and then we'll actually take a look at the chart pattern out here. And this is going to show you, Jim, the DLN. It's going to show you the TAS market profiles, see where price is trading in relationship. What we can see on my other chart, while this here is popular, Wisdom Tree U.S. Large Cap Dividend Fund. Okay, so I'm looking to buy that for a long-term hold for your son. I think we're not going to make a long-term bottom for at least a couple of months. What do you think? So I think you're sort of seeing my thinking at this stage here. So far, as 121, the Dow has held, I think, a fairly important level of support, which was the 2018 low. And there is the possibility that we could see some type of big rally. And the big rally would get above that red line on the daily time frame. I'm not prepared to call that or tell you that that's what's going to take place out there. And so both scenarios that I can see at this stage of the game are still open. Both scenarios, either moving lower or moving higher, which is why I'm just going to try to keep it simple if I can and just pay attention to price levels in those key areas. And we'll take a look at my TD9 count breakout areas as well. Those are important to take a look at. But specifically with regard to DLN, price is moving lower, doing less relative energy. Rhodes momentum indicator signal out here. And if you were to get a bullish reversal candle, you won't get it today. You had the gap to the downside. And for some reason, it's not filling in today's data. God, I was having this problem earlier, and I don't know what it is. But it's not going to change what we're looking at. That's not a bullish reversal signal out here. Not yet. But if you were to get a bullish reversal candle, I guess since it's long-term, I can sort of make this pretty easy. Sort of, because I don't have the exact number for you. But if this were to close above 91.58, then what we could say, Jim, is that the low out here, or right now where it's trading at 78.19, would have been a good buy versus good buy, versus bouncing up to 91.58, sort of what we were looking at inside the NQ, and then turning down from there from a counter trend rally. So we'd get some really large rallies. Could get some really large rallies out here. We're just going to have to take this step by step by step by step at this stage of the game. But we can also go back and take a look at other areas of support out here. But first, let's go take a look at Goldilocks. As I had mentioned that I was trading lower, and let's go see what gold is doing. And it's the week. It's the end of the week out here. And so this is important to take a look at what gold is doing on a weekly basis. So here what we see, this is the second out of the last 3 weeks where we have confirmed Rhodes momentum indicator signals. Two big old bearish engulfing candles out here. And so that high in that 1700 could be a very significant high. And if you're going to ask Stevie, based upon prices trading below 1549, that was old resistance, could have become support. The day is not over. But if price closes below 1549, and you're asking me, should you hold on to a long position in gold going over to the weekend? Well, this chart is suggesting no, you shouldn't, because you've got the valid topping signal, and really support is at 1465. This is the weekly time frame. This is the weekly time frame giving you that topping signal out there. So I would say be very careful. At least that's the message from the weekly time frame chart. And I'm going to use that 1549 area right now in the weekly time frame as an area that price should have held, and it hasn't. Again, end of the trading session. So what the close today, the price of the close, and granted, we haven't qualified for Stevie's 2-week bar, but the real support on a weekly basis inside gold, 1465. I would not be surprised. You should not be surprised for price to make it down to that level. And if you take a look at the folks that are just getting hammered today in gold, it's everyone. What do you mean, Steve-O? So let's go take a look at some other charts here for gold, because I think this is really, really important to take a look at. Here, if you take a look at gold trading in euros, pounds, yen, dollars, it's down everywhere. Everywhere. And you got an island top in gold in the Japanese yen, priced in Japanese yen out there. You heard me, right? You can see it out here. You can see it on your screen. You can smell it. What else took place in gold so far today? Again, I don't know what the end is going to look like. Well, let's go take a look at our horizontal trading ranges. That's one thing to look at. But look at the rising trend channel out here. And what gold has done is gold it's trading below that rising trend channel out there. And that's an area that should have held. What's the price that it needs to hold by the end of the trading session today? Probably around 1552. It's possible. It's very possible that it can bounce up to that. I don't know. I can't control that. But what I am saying, what I am expressing to you, what I'm asking you to look at on this chart here is that an important area, if this was the close, this is suggesting 1462. 1462 was the monthly horizontal trading range that's got a nice cluster there. This is still telling us at 1:26 in the afternoon, not on an intraday basis, that gold still wants to move lower. Be careful. Be careful. See Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the chart that I've got up on my screen right now, this is a 30-minute time frame chart. I've got the continuous contract so that I can switch to larger time frames to get all the data. Like we can go take a look at monthly if we want to and look for support levels. And we'll do that out here. But the reason, so these lines, these horizontal lines, these are established by the TD9 count areas of support and resistance. And they work so well And this is about one of the easiest tools. Now, look, if you're going to do it on short-term time frames, you really probably have to automate it. But if you're doing it for daily charts out there, it's really kind of easy peasy stuff to do. I mean, tedious. Much easier to create a tool like this to get it done. And so when price is moving higher in a bullish market out here, like gold has been, and we're just coming back here March 3rd, March 5th, and you see these TD9 count support levels. You can see right around March 7th or so, price pulls back and it's just testing support. Yeah, it was a slight close under 1652. This is where Stevie's 2-bar rule comes into effect to prove itself to you and I. So immediately pops back up, just kind of like a ball underneath underneath your feet in a pool or something like that, which I think is what I'm going to do after the show today. I'm out of here. Don't want to look at any more charts or anything like that for the rest of the day, if possible. But in any event, what I want you to really notice here is now what we're seeing are these key breaks of the support. In fact, right out here on March 11th, look how price ran into, got up to that 1649 area. That was the ceiling. That was old support that then became resistance out here. So you need to see resistance levels fail in gold, and that's way up right now at 1634. So that's the 30-minute time frame chart. The promise out here for gold would be the daily time frame chart, and so when you break one level, so this goes back to my theory, you break one level out here, and if they can be objective levels, the lows of each calendar year, that's objective, that's easy enough. The TD9 counts, that's objective because the system is figuring out those levels out here. And when you break one, you go to the next. Well, gold broke through 1564, went to the next, broke through that 1546, got down to the next 1502. Did it hit it exactly? Come on, folks, you got to give it just a little bit of wiggle room out there. And so got to watch 1502 for sure on the close, because I would say if 1502 fails to hold its support today, which is a possibility, then where's the next level? Where's the next floor? 1465, and then 1412, 1336, 1272. All those are in play, but they're in play in the future until we get to see these areas broken. So I hope that helps you out in taking a look at gold and just a better overview of what's going on across. It's really important to take a look at, especially gold. How is it trading in all those other currencies? Let's go to our first caller. Let's go out to we got Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
Oh, I'm doing fantastic, Steve. Thanks so much for taking the call, and I hope everything's well with you.
It is. Thanks so much for asking. And so Occidental Petroleum, I'll get it up on the screen out here, and describe for the folks what you're looking at and how I can help you.
I bought it yesterday. Excuse me. I was lucky enough to get it in the nines, and so I have somewhat of a cushion here that's basically where my stop is, where I bought in.
Sure. And
just wanted your thoughts on that. I was going to make a comment real quick. You're talking about gold. There was a really nice opportunity this morning that anytime it opens it as high, I like to do those weekly GLD, the puts, or it depends on which direction it's going, but in this case, the puts. And where you can pick them up for very inexpensive. They were 65 cents this morning and on the 149s, and able to make some good money on those. But anyways, so on Oxy, I was just wanted to get your thoughts on that.
Yeah, well, Brent, a very, very, very nice trade there. That's great. So in the case of Oxy out here, what you have that is formed today, about the most help that I think I can be for you in Occidental Petroleum is just take a look at the daily time frame chart, which generated a new bullish structured profile. And so even though your stop is basically at your entry point or maybe the low of yesterday out there, if Occidental Petroleum even if it's a counter trend rally at this stage here, price should be able to make it to 1448 next. And then a move or close above 1448, you're looking at least at 1951, which that profile is really picking up the top of the gap or the high of March 9th out there, which was that high was 1919. So the profile is just slightly above that area, but basically it's inside the gap out there because I don't have a bullish reversal candle to create some type of A to B equals CD down pattern. And certainly there's an A to B equals CD down pattern. So was there something else? So were you looking at, I'll pull up in the larger time frame chart, were you gauging this back against another level or just simply a washout low or anything else that you were looking at that I can look at for some listeners as well?
Just more of a washout low. I mean,
Okay.
I thought it had gone to an extreme, once you got down to single digits. Figured I'd take a chance there. And again, I'm just going to use my stop as, where I bought in. And if it works, great. If it can keep going, because I'd like to hang on to it longer term is the whole point of buying it. And if that doesn't work out, if I get stopped out, then that's how it goes.
So I think the best piece of news that I could provide to you, and it's not me, I'm just reading the screen. The best piece of news that you could have received is that there's a new bullish structured profile that formed. 1196 should be support. That was tested earlier in the day today, and it bounced off of it. So that's just also confirming for you the strength of that profile. And therefore, a close below 1196, well, that would likely say your stop is in jeopardy out there. But right now, it looks that's the best information I could pass on to you.
Yeah, and this is, of course, very early into this trade, and just have to see how it plays out. But that's, kind of how I'm planning on handling it at this point.
Yeah.
See how it progresses.
So I think to go along with that, and to the extent that Occidental Petroleum is going to trade, directionally speaking, with light sweet crude, when we take a look at light sweet crude, I mean, you'd like to see both of them moving higher. This does have a confirmed 1 to 1.618 A to B equals CD to the downside. And that was that bullish engulfing candle. So the lows that were in from Monday, that's really where the stop would be on a long trade here. More likely than not, price is going to bounce up in light sweet crude. I'm thinking to 36.85 or so. That's the oscillator and change line. But more likely than not, if price can do that, I would think that it would go fill the gap. And so I'd be watching this, you're going to trade Occidental Petroleum based on Occidental Petroleum, but you'd certainly like to have this wind at your back. For you too. So you've got that confirmed by the D point inside of light sweet crude. I don't know too many people that want to step into that trade just yet, but you do have. But that's a nice thing too going for you in that energy sector.
Yeah, it looks like it should go up and test the oscillator unchanged line. I guess it now is red. We'll see how that turns out. How it handles that.
Yeah. And so, you just kind of pay attention to that, too. So, hey, great trade on gold. Great trade. Beautiful trade there. And nice entry here in Occidental Petroleum.
Yeah, I mean, we as traders like to have volatility. We've definitely have that. So it's just you gotta take the good with the bad.
And we might have it for a little while, We might have it for a little while.
We'll all survive.
Oh, yeah.
Be thankful for what we have. We're all been very blessed with a lot of great stuff.
Yeah, just in departing here, I saw Barry Sternlick on Squawk Box going into the close today. He's really good friends with my best friend. And I thought he did a great job of trying to calm people down, kind of like you, Brent. So you got to call each day and put out that nice positive message for folks that we're all going to survive this.
All right, take care, Steve. Thank you.
Take care. Have a great weekend. That's Brent in Martinez, California. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, Dow's up 910, S&P 102 right now. Let's go out to Overland Park, Kansas, and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing today?
I'm doing fine, thank you.
Great.
I was calling in to see if I could get your guidance on TLT. I was looking to take a short position in TLT, kind of more on an intermediate term basis, and I'd like to get your thoughts. From my perspective, it looks like, kind of like you had said a few days ago, maybe we've just witnessed the bubble has burst in the bond market, at least the treasuries.
It's possible, that's for sure. So one of the things in taking a look at TL, so specifically with regard to TLT, if you're watching us on Tiger TV, I've got the 3 different time frames up with its TAS market profiles. Now, of course, what I'm going to do for you is we're also going to go take a look at the 30-year Treasury and see what patterns we can see on it daily, weekly, and so forth, and try to get a better feel. But here's what you know about TLT right now is price is trading below the bottom of its daily profile, which is 155.09, and it's the first day below that. You know, you hear me, I like to see 2 days below a key level of support. So I wouldn't do anything today per se, Robert. I would at least wait to see. That's based on this chart here and just looking at the TLT. We're going to go look at something else. But that's how I would view it out here.
Yeah, I wasn't going to enter into. I was a little leery about entering into it before the weekend. I was going to wait till early next week.
And I'd really do that because when you and I go look at the weekly and the monthly chart, and we're going to go look at my other tools out here, but price is well above resistance, which would be the top of its profiles out here. So we've got a mixed bag. And then that really means that we also have to see how are Treasury bonds trading in all the other currencies out here. And in this case, I'm just not completely getting the picture yet. I'm just not. I don't have a clear picture when I look at that. So let's leave that area, and let's go move over and take a look at my other tools. Let's begin by looking at the daily time frame for the 30-year Treasury.
May I interrupt you? Just a quick clarifying question. So You're saying in other currencies it's a mixed bag?
It is. I don't have clarity there. Okay. And I'm not sure why, and I don't think there's anything wrong with my screen out here. But whereas like in gold, when we looked at it, it's clear. It's like a clear and convincing message, which then sends us back to the other time frame charts to look for support, resistance, hey, what's going on, and so forth. Where could rallies take you up to? Those types of things. I don't have that same clarity here on the 30-year. And this today looks like it's going to be the first day below Stevie's green line. And so, and it's just one day, and I'd like to see 2 sessions. It's another reason to, say, hey, wait till Monday, get some confirmation of it. You may be entering the price; it may cost you a little bit more, but that information is probably really important out here. If we look at the weekly time frame chart, this is going to be bar number 9 of a TD9 count. And that itself may be a top or a short-term top. But price has to break my green line, which is the 167, maybe close to 168 by the time, 167 and maybe it's 167.30 or so. But right now, the point is, even with a topping signal, even if you did enter the TLT or you shorted TLT by buying TBT out there, you'd have to watch what would happen with price on a weekly basis as it gets that green line, because that could really be support for the 30-year. And then if I go look at the monthly time frame out here, the monthly time frame is not generating any kind. All that I can do on a monthly basis is draw in some A to B equals CDs out here. And here's one. Here's a small one that we'll draw in. And obviously the month is not over, so we need that to take place, but it'll be over before we know it. But here's an A to B equals CD pattern that it completed. And I could show you the larger one that it also completed, an even larger one. But the point is, or the point I'd like to make to you, Robert, is that when an A to B equals CD pattern completes, the only way that I know that it's completed is with a bearish reversal candle. And we don't have that yet on a monthly basis, so I'm not willing to say that this A to B equals CD is over. And I don't know that the move lower is over in the markets. And if people ran to treasuries before, I don't see a reason why they wouldn't run to treasuries again. If there's a problem overseas, why is gold selling off the way that it is at this stage here after Europe closed down? Why did it wait? And maybe there's some logical reason out there. Why are treasuries lower out here? I mean, if this is supposed to be the safe, it's not like our markets have broken out.
What's interesting is what this has proved to me is Treasury seems to be the ultimate safe haven.
Well, so when you buy treasuries, when you buy treasuries, so I'm with you there. I think of it like this. So if you're buying U.S. treasuries, you're going to be paid back in U.S. dollars, right? If you're over in Europe and you want to convert to U.S. dollars, one easy way to do that is to buy the TLT.
Got it.
Not sell the TLT, okay? So that would be one easy way to do that, because now you're in U.S. dollars out here. And if we look at, so I know that folks were thinking or have been thinking that Treasury bonds have been the safe haven over this week out here, and that gold was. Well, we know that's not the case. No way. Today's a perfect example of that. But the instrument that has been the safe haven, the instrument that has absolutely been the safe haven this week has been the U.S. dollar. So if there's a flight to the U.S. dollar, which you and I are looking at this right now, right here, gold is not pulling back because U.S. dollar has been moving higher. That's BS. That's crazy talk out there. You've got to look at how gold is trading in the other currencies out here. That would be assuming that everybody trades gold in dollars. You've got to look at what's on the other guy's screen out there, and it's converted to their local currency. So what I'm going to say is that, Robert, when I take a look at this, to me the meaning is that where capital in this week has not been certain as to where to flee to, this is showing me where it's fleeing to, the U.S. dollar. And so you've got to think of that. I'd like you to think about that U.S. Treasury is also being a way to get into U.S. dollars, and just says, be careful there. Be careful with that one. Okay. And so that's my take. I could be full of, who knows what, hooey or what have you, but this is also bodes well, I believe, folks, eventually when we do have a bottom for the U.S. stock market. Because people will also want to get into U.S. stock. So if it comes back, it'll be when we do find this bottom, whenever it is. What we probably see out here, Robert, we will see gold moving higher, the U.S. dollar moving higher, the U.S. stock indices moving higher, and then Treasury bonds, I'm not sure, but they may be moving higher too.
Okay. So, do you have time to look at natural gas?
Yeah. Are you in that trade, looking to get in that trade?
I bought a starter position a couple of days ago, and I'm reconsidering it. Doesn't seem to have any momentum behind the move.
Okay. So I actually like that as a trade out there. as a possibility for a trade. Now, we're going to go to a break in a minute, so I'm going to ask you to hold on. But here's what we're looking at, and that is that what happened yesterday was a pullback to test Stevie's red line and the bottom of its daily profile, and it held that. Or maybe we don't even need to. It looks like there's an A to B equals CD pattern that may be underway inside of natural gas to get up to the 213, 224 area.
Okay. Thank you.
Yeah, you bet. Hey, thanks so much for calling. Have a great weekend. That was Robert in Overland Park, Kansas. Steve Rhodes with TFNN. We'll be back in just a few.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish a gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So you want to talk about a wild ride. The question is, can the U.S. pull a down under today? What the Sam heck is Stevie talking about? A down under means we're going to go take a look at the Australian S&P 200 out here. You want to talk about a wild move? This is the largest move on a daily basis I think that it's had. I haven't gone back to measure it, but here, if we just pull this chart back, you're going to see you don't see days like today out here. And so here, and it's similar to our markets, I guess, right? We've had a move of over 2,000, which is kind of, but this is a big move here in Australia, which pushed down to a low of 48.73 and closed at 55.93, and it closed at the top of its session. So I don't know the answer, but there is a market that was able to close at its session highs today. And so now, can the U.S. markets pull a down under? Well, they're setting up for that possibility. What do you mean, Steve-O? Well, first, this is a real short-term market breadth tool for the S&P 500, in essence for the ES Mini. So when that blue line crosses the red line, that, by the way, took place today. The most recent cross was at about 12:20, 12:15. So I'll pull over I want to show you how I use the market breadth tool, the short-term market breadth tool, along with the TAS market profile. So then I go to the ES Mini. What was it doing at the 12 o'clock time frame, 12, 12:25, 12:30 time frame? And what price was doing was pulling back and testing support. So what you had going on was you had positive market breadth. At the same time, the price was pulling back into an area where you would believe that there should be support out here. So now the question is going to be, just using that tool, can price close above 25.95 out there? That's the top of its profile. That's the next resistance area. Now, there's others. You got 26.03, 26.34 out here. Those are also areas to be watching. Now, we only have that message right now on the short term time frame chart. If I pull over, I think, this is here we can look at the 60-minute time frame. We don't have a positive cross here just yet. So, folks, look, I hope that the information I provided you today is helpful to you. It's been one heck of a week. Get some rest out there. Prepare for Sunday night. Lord knows what's going to take place out there. But we'll be back with you on Magical Monday. Have a terrific weekend. Take care, folks.